Hey everyone, and welcome back to another individual stock analysis. In today's video, we're going to be breaking down Costco Wholesale Corporation and breaking down the entire analysis process that I go through before I make an investment, so then you can go ahead and apply that process to businesses that you're interested in and businesses that you're looking to invest in. So, Costco, it's a business that a lot of you guys requested that I have a look at, so I thought I would. It's a business within my area of expertise, in my area, my circle of competence, so I thought I would check it out and break it down in today's video. And of course, we're going to go through the exact same analysis process that I always go through before I make an investment. It starts off by looking at the business itself, its industry, its competition. Then we look to find if the business has some kind of economic moat, some kind of unique advantage that it has over other businesses in its industry. We then look at management in a number of different ways, and then finally we do intrinsic valuation, which is where we're actually trying to estimate how much cash we're going to get out of a business, Costco in this example, and therefore how much we should be willing to pay for it. So if you do enjoy the video, please let me know by leaving a like on it and letting me know your thoughts down in the comment section below. But for now, let's get straight into this analysis and start off by having a look at Costco's business. What is the business? What does Costco sell? So essentially, Costco offers a retail experience, but one that is quite different to your traditional retail experience. Traditionally, a retail business will source their products from a manufacturer, from many different manufacturers around the world. They will ship them into their warehouses, and from their warehouses, they will then distribute them out to their front retail stores where you go in and all the products are nicely laid out so that you buy the maximum amount of things and that you can find everything in categories. And that's generally the traditional retail experience. But Costco kind of deletes and takes out one of the major steps in there, and that is that final step. So Costco, they source their products from manufacturers. These are private label products as well as many well-known branded products that they source, and they ship them straight into their warehouses, and that's it. At the warehouses, people with a Costco membership, so you pay a yearly membership, people come to the warehouses and they essentially buy products that they would normally buy at retailers, but at substantially cheaper prices and usually in a higher volume. So Costco sells products much cheaper because they pretty much don't have to include that final step where they have to go out and distribute to many different retailers. They just ship the products into their warehouses and can reduce their costs that way. And also people are buying in significant volume. People are buying in bulk, which means that they move inventory really quickly, which is also another cost advantage. It's no surprise that the vast majority of the revenue generated by Costco comes in the form of merchandise, in terms of the goods that they're selling, and only 2% of their revenue is generated through those membership fees. The retail industry is a very competitive landscape, and it's also one that's been recently shaken up with the massive influx of people buying products through e-commerce, through the internet, and getting them delivered to their door. This is primarily driven by Amazon.com, which has come into the retail space and is experiencing massive growth in this area, delivering products very quickly to people's doors at very cheap prices, is making it a very viable competitor against some of the other major retailers that have been around for quite some time, such as Costco or Walmart. One of the most important aspects of investment analysis is to identify the key business indicators that are going to tell us the most about the performance of the business over the long term. These are things, metrics, numbers that are unique to the business or the industry that tell us about how successful the business is performing. So I'm going to explain one of these for Costco for you, and one of these key business indicators is membership renewal rates. So obviously people have their memberships and they usually buy their membership for 6 or 12 months in advance, and then of course 6 months or 12 months rolls around and the customer has to decide whether or not they're going to continue to stay a member at Costco or they're going to cancel their membership. And Costco therefore has a renewal rate, the percentage of people who decide to stay on, the percentage of people who have liked the experience and the savings that they've achieved from going to Costco warehouses versus other retailers, and they're wanting to stay on and continue to pay that membership fee. And Costco's renewal rate has consistently been up at the 90% range, which is really, really impressive. And this can be used as a good metric, as kind of an indication of somewhat of a competitive advantage, but also just what is the opinion of customers that are going to Costco stores. It's very different to another retailer where you might have to survey customers to get a feel for how they like your products. But in Costco's circumstance, because people have to pay a membership to go there, you can immediately tell if an individual customer, or broadly all of your customers, are happy with their experience by how many of them are staying on as members. And in Costco's case, they have seen very consistently high renewal rates, and watching this over the long term will be a good indicator of how their business is going to perform. And then, of course, it's also very important to look at the risk factors that are associated with an investment in this business. It might be a fantastic business at the time, but there are always intrinsic risks that could impact the future of the business. And one of the risks for Costco is that they have these ambitious plans to expand internationally, but there are many markets that they have not yet entered, or markets that they haven't yet saturated, that they don't know if they're going to be able to move into those markets. So what happens, I've seen this many times, is that there are US businesses that are very successful in the US, but the moment they try to expand internationally, they realize that their products or services are just not the right fit for people in other countries outside of the United States. An example of this was Starbucks a while back. Starbucks is making a comeback now, but a long time ago, Starbucks tried to break into the Australian market and essentially failed. All of the Starbucks stores ended up getting shut down, and now they're starting to introduce some more. But it's not always super easy for businesses that are successful in the US, or one particular country for that matter, to then break out into the rest of the market. So their growth plans are obviously to expand and continue to expand internationally, but whether they're going to be able to do that quickly and effectively is up in the air, and that is a massive risk factor for a company like Costco. By the way, guys, if you're enjoying this analysis and you want to learn more about the 4-step process that I'm going through in this video, where I start by looking at businesses we understanding industry competition, we look at economic moats, we look at management, and we do intrinsic valuation. If you want to learn more about that, I actually put together a free 20-minute training video on my website, which you can get access via the first link in the description below. So go check that out after this analysis if you're interested in learning more about that process. But with that said, let's get into economic moat analysis. And in this section, we're trying to identify some kind of unique advantage that the business has over other businesses in its industry. So the way that we do this is we first want to see what we can identify within the business. What do we see when we look at the business? Is there any kind of advantages that Costco would have? And one of the key advantages that they have is a cost advantage. Because they don't have that final step in their supply chain, because they don't go from manufacturer to warehouses to a distribution system to the retailer, they just go from manufacturer to the warehouse, and it's very simple and it's very fast. Because of that, because of the fact that people buy in bulk, and because of the fact that people use memberships to come and go to their places, they can have a huge cost advantage over other retailers. They can price their products substantially lower. In fact, they most of the time price their products at almost break even, which means they're making very little profit on the products themselves, but they are making most of their profit from the revenue generated through their membership fees. But of course, this is just a hypothesis or some kind of opinion that I've come up with. We then need to see it quantitatively backed up in the numbers, which means we need to look at those 4 key areas that we always look at: sales, earnings per share, equity, and free cash flow. So let's jump over to my spreadsheet and check out some of those numbers. Sales growth has been very consistent. It's a little slow, but it's not too bad, between 6 and 9% consistently over the long term. Earnings per share has been a little bit better at between 12 and 16% over the long term. Equity growth has been the slowest out of all of these 4 numbers at 3% over the long term, and looking over the 7-year number, they really haven't grown their equity at all over the past 7 years. And in terms of free cash flow, very similar to earnings per share, growing at somewhere between 14 and 16%. So through my economic moat analysis of Costco, which was much further in depth than what I just explained to you, but through that process, I identified that Costco did have a long-term competitive advantage over other companies in its industry, and that was supported in the numbers that, for the most part, are very consistent and growing over time, which indicates that customers are consistently coming back and buying more products and renewing their memberships. So with that said, let's move on to the third part of analysis, which is to to look at management. And traditionally, when I do my full stock analysis, I look at management in a number of different ways. We're talking about how honest they are to the shareholders. Are their values aligned with the shareholders? How effective are they at managing debt? And how effective are they at investing within the business? Actually investing in assets and generating a return on those assets. But in the interest of time, let's just zoom in on their effectiveness at investing within the business. And the way that we look at this is by looking at the return on invested capital, which is basically a comparison between the cash flows that the business produced compared to what they had to invest in order to produce those cash flows. Costco's return on invested capital has been very impressive. All 10 years are above 10%, and there's a pretty consistent upward trend in their ability to invest within the business, which shows that management is getting more effective with their investments over time. So after I've gone through those first 3 steps and identified that this is in fact a great business, then I want to go ahead and try and calculate how much cash we can expect to get out of this business and therefore know how much to pay. If we don't know how much cash we're going to get back, there's no way we can know how much to pay, because that is ultimately what investing is. Comparing what we're going to get back to what we're going to pay. So to do that, we need a few things. We first need to calculate the cash flow for owners figure, which is how much cash we're going to get back, how much cash a business returns to shareholders in one form or another through investments, buybacks, dividends, that sort of thing. So this is a figure that I calculate using my own formula, and I calculate that for 2018, and then we're going to be growing that into the future at a range of growth rates. And why we choose a range of growth rates is because we can never be 100% accurate. So we want to use a range at which sort of a range of cash flows. So maybe at the low end, they produce a small amount of cash flow, and at the high end, we receive quite a large amount of cash flow. And then we get a range at which we can start buying, rather than trying to pinpoint exactly what intrinsic value is, because there is no point at which intrinsic value exactly fits. And if you want to learn more about cash flow for owners, just stick around to the end, and I've got something interesting for you that is completely free. But in order to do this, first I've calculated cash flow for owners. So cash flow for owners in 2018 was $4.3 billion for Costco. And then we go ahead and pick a range of growth rates that are reasonable that the company could achieve over the next 10 years. Now, in the interest of time, I'm just going to be picking one growth rate. And in this example, cash flow for owners and earnings per share have been growing at 13% over the long term. So we're going to be using a compounded annual growth rate of 13% in this model. And if we go ahead and plug in our $4.3 billion starting cash flow and our growth rate of 13% into the discounted cash flow calculator, and using a discount rate of 22%, which is the return that we're targeting in this example, we get an intrinsic valuation for the entire company of just under $202 billion, and therefore a buy price based on the return we're trying to achieve of $45 billion for the entire company. And that translates into a buy price per share of $102 per share. The current market capitalization of Costco is about $120 billion, and the price per share is about $273. So using that model, I'm not saying that's an accurate model, this is just an example of a model you could use, but using that model, you would not be investing in this company for a very long time. The buy price based on a 22% target return was about $100 per share, and this is still using quite a substantial growth rate. 13% is quite a high growth rate to assume. I would normally not assume something this high, but if I am, I'm definitely going to be waiting for that price at a 22% return. If I lowered that return, then maybe we could start buying a little bit earlier according to this model, but clearly it may be undervalued, but it's clearly not a buy using this model. And of course, this is just one example. This is certainly not a recommendation or any advice about Costco specifically, but if you want to check out my free spreadsheet, you can go over and get it via one of the links in the description below, not the first one, but you can download that and you can mess around with the numbers in there and see what kind of growth rate we would need to assume in order to buy it at the current price and that sort of thing. So you can go ahead and mess around with that. But I did just mention before that if you wanted to know more about the cash flow for owners and how I came up with that $4.3 billion figure, then you can actually actually check it out when you check out the full stock analysis that I did on Costco. I put together a free sample of a full stock analysis, which is about 12 pages long, plus a 1-hour presentation where I explain the entire process I go through with Costco stock. You can get that via the second link in the description below. Essentially, the reason why that's there is because it's an example of a report that the members in Learn by Example get access to. So the members in Learn by Example get access to new reports and presentations like the free one you can get access to every 2 weeks, and there's about 15 hours of reports that the members have already got access to. And essentially, the purpose of these reports is to show you the process that I go through with real life examples of stock analysis, and therefore you can go ahead and apply that to other businesses. So don't take my full stock analysis of Costco in this video or in the free report and presentation as advice or recommendations to do with Costco specifically. While it is my personal research, that's not the purpose of it. The purpose of it is that you can go through and apply that to businesses that you're interested in. So if you want to check that out and learn more about the process, I go really in depth in that video about the process and where I get information from and that sort of thing, then go ahead and get that via the second link in the description below. And then of course there's still that first link if you want to learn more about the process and how to get enrolled in Learn by Example if you were interested in joining. But thanks everyone for joining me today. If you did enjoy it, please leave a like and let me know your thoughts down in the comment section below. Of course, if you want to see more, hit subscribe and join the team. But for now, I'll see you guys in the next video.